Well, the stock market has indeed been volatile since the UK vote, and that's making one thing clear for investors. The fallout and its impact on the markets will likely linger for a while. Dominic Chu has more.
Stocks in the U.S. took a breather today after 4 straight days of gains, and that was all on the heels of that vote by the United Kingdom to leave the European Union, that so-called Brexit vote. And it could be a big part of the market story for months and possibly years to come.
You're talking about a potential recessionary item for the UK, if not Euroland. And then longer term, of course, the possible other dominoes to fall. What are they calling it? Italy and Portugal. So it's the canary in the coal mine here. It's potentially a very significant event.
Many investors used the recent sell-off to buy stocks at a discount, and as a major result, the 10 industry sectors within the S&P 500 are positive since the market lows on June 27th. While healthcare and industrial stocks have posted some of the biggest gains, materials and utility stocks have posted some of the smallest ones. A number of big-name stocks have not participated in the post-Brexit rally. Among them, familiar names like Zions Bancorp, also farm equipment maker Deere & Company, chain restaurant owner Darden, and oil and gas company Southwestern Energy. But overall, some experts believe that the U.S. still represents one of the most attractive places to invest in the world.
To the extent Europe dissolves economically, we'll have a much stronger hand, and U.S. stock and bond prices and currency should fare well over the intermediate term. So lots of potential opportunity, but at this point, without some of the geopolitical uncertainties resolved, it's a real gamble.
As for what to expect in the second half of the year, a lot will depend on the global economy.
If we don't see world growth hold up and companies around the globe's earnings come in better than last year, to me that's the absolute key that's going to drive the market higher. If things stay relatively flat, earnings stay flat, I think the markets probably stay in the band they've been trading in for the last couple of years.
Now, add to that potential action or inaction by the Fed, as well as other central banks around the world, and of course our own presidential election uncertainty, and you have the makings of what could be a rocky ride for the rest of the year. For Nightly Business Report, I'm Dominic Chu.